Hello friends, welcome back to my channel Finance Seco India. Today big news. Ashok Leyland just dropped its first bonus share in 14 years, an eye-popping 1:1 bonus for shareholders. Imagine owning one share and waking up with two. But will this boost your wealth or just your share count? We have got the insider dates, the stock reaction, and the real strategy behind it. Stick till the end. We are not only decoding the bonus, but also revealing what analysts are watching next. Hit subscribe and let's dive straight into it. On 9 July 2025, Ashok Leyland board approved a 1:1 bonus share issue. That's one free share for every share held. The record date is set at July 16, allotment on July 17, and listing by July 18. The last time this happened, back in 2011, also at a 1:1 ratio, and it gains market traction. Share jumped 2% on the announcement, trading around 254 to 255. So friends, let us talk about Ashok Leyland's financials. Ashok Leyland posted a 38% year-on-year surge in Q4 net profit, reaching rupees 1,246 crore, up from 900 crore a year ago. Revenue grew by 5.7%, hitting 11,907 crore, driven by volume gains and stable ASPs. EBITDA climbed 12.5% to 1,791 crore, pushing margin higher and make record quarterly performance. Additionally, the company maintained a healthy balance sheet and rewarded shareholder with a rupees 4.25 share per interim dividend. Combined with earlier payout, the total financial year 25 dividend reached rupees 6.25 per share. This bonus share announcement is the icing on the cake, built atop record-breaking profit, robust cash flow, and consistent shareholder returns. It signals confidence and strength, investor trust. So now let's see how bonus works. If you had 100 share at rupees 250, your holding is valued 25,000 rupees. After bonus, you will have 200 share, each theoretically priced at rupees 125. Your overall value remains 25,000 rupees. So it doesn't immediately create extra wealth, but liquidity, fractional trading, and market perception can bring benefits. Companies use bonus to signal confidence and reward shareholders. So, friends, let's discuss the benefits of the bonus share issue. Ashok Leyland has been sitting on solid reserves and cash flows. A bonus share improves liquidity and often increases retail participation. It also signals the company's confidence in future earnings. The company's net profit surged in financial year 25 and debt has been significantly reduced. With a healthy balance sheet and steady earning, the bonus was both expected and welcome. Now let's discuss the bonus share issue market reaction. Share price spiked initially, then trimmed after profit taking. On July 10, it peaked at rupees 254 and closed near rupees 250. Technical analyst highlights the breakout potential, but post-bonus volatility is likely. Watch for volume activity and new support levels post-ex-bonus listing. Now let's discuss the commercial vehicle industry health. Riding on India's infrastructure boom, Ashok Leyland sold a whopping 1,95,093 commercial vehicles in Q4 financial year 25, nearly matching its all-time high of 1,97,366 units, signaling the strong tailwinds from India's infrastructure push. Exports surged. Their MHCV bus export jumped 29% year-on-year from 11,853 to 15,255 units, highlighting their growing global footprint and diversified revenue stream. Why it matters? This performance shows robust demand domestically thanks to the strong infrastructure and fleet expansion, diversified growth by overseas market, reducing reliance on local cycle. So cyclic nature of the CV industry demand can swing sharply with GDP shift, inflation pressure, Rising costs for steel and electronics may squeeze margins. Global slowdown could impact export momentum. EV competition, long-term challenge as green mobility evolves. So Ashok Leyland is riding a dual wave: domestic infrastructure demand plus export growth. That position it well, but cyclic sensitivity, cost inflation, and global softness are real factor investor needs to monitor. Let's now discuss the benefits and risk of the bonus share issue. Due to bonus share issue, liquidity spikes means easier trading. Issuing bonus share lowers the per share price and doubles the number of shares, making it more affordable and liquid, which tend to attract more buyers and increase trading. Half share price is equal to smaller ticket size. Post bonus, the price per share drops. Example from rupees 250 to rupees 125, making it cheaper for a small investor to enter the stock, enhance inclusivity and broadening the investors. Confidence boost from management. Issuing bonus share signals strong reserve and confidence in future performance. It's a positive signal that often boosts investor sentiment. Now let's discuss the risk. So EPS halved until earnings catch up. With twice the share outstanding, earning per share will be halved in the short run unless the company significantly grows its profit. Brokerage cost doubles. More share means greater trading volume and higher transaction cost, especially relevant if you rebalance or exit a large position. Potential post-tax volatility. The stock market see a price dip post-tax date if traders sell after receiving bonus share. This is common as the market adjusts to the new share structure. While the bonus issue boosts liquidity, lower share price, and send a strong confidence signal, it temporarily dilutes EPS and could increase brokerage cost and short-term volatility. For savvy investor, it's a strategic move, but only when paired with a strong fundamental outlook and long-term perspective. So now let's discuss what investors should do now. So what should be the strategy? Buy if you believe in India's commercial vehicle growth story and are looking for long-term compounding. Hold if you already own share, bonus improve liquidity and tax efficiency. Avoid buy and sell if you only chasing short-term gain. To summarize, bonus share is good for liquidity plus confidence signal. Ashok Leyland's strong result and solid fundamental make this a strategic move. Like this breakdown. Hit like, subscribe and drop your comment below. Are you buying or holding Ashok Leyland? And don't forget to check out our upcoming video on Tata Motor versus Ashok Leyland. Who wins the CV crown? Subscribe my channel Finance Co India and like this video and comment your thoughts. Thank you. Jai Hind.